Hi, my name is Riz Malik from R3 Mortgages, and today I'm just going to talk to you about second charge mortgages and explain how they work. Okay, so let's say you've got your main mortgage with Bank A, for example, and Bank A may have lent you £100,000 on a property that's worth £200,000. Okay, let's say maybe you've locked into a fixed rate for 5 years, and then in a year or so's time after the deal's passed, you need some more money. You maybe want to do home improvements, you maybe want to do debt consolidation, whatever. You go back to Bank A and say, hello Bank A, can I have maybe a further advance? And for whatever reason, they're not able to advance you any more funds. You may even go and look and see if you could get an unsecured loan or some borrowing, and for whatever reason, that might not be an option you want to go down or consider. A second charge ultimately is another option that you have, and what that means is you go to typically another lender and you ask them to lend you the money and sit behind the main lender on the list of security. So ultimately, if anything happened to the property and the bank wanted to seize it, the first charge lender would be redeemed and they'd get their funds back, and then the second charge lender would get their funds back only after the first charge had been satisfied. Normally for a second charge borrowing you will be paying a higher rate, and the reason for that is because the second charge lender is sitting behind the first charge borrower, but they can be used and they can solve a multitude of problems. So if you're looking to borrow money against your property and you've looked at your options and your bank won't release further funds on the current borrowing, then you may want to consider second charges and have a look into those. My name is Riz Malik from R3 Mortgages. Tune in next time for some more useful hints and tips.